Not always good to have you. Why are you expecting a rebound in the fourth quarter?
Well, good morning. Yes, I think what we're seeing is the impact of the last few months of OPEC increasing production, the release of SPR supplies, and in general, the ability of Russia to get around some of the sanctions. But going forward, these are going to get a lot tighter, the sanctions. There's also a limit on shipping because the Russians will not be able to use any of their vessels. And, you know, it's a two-part problem. One part is oil, and the other part is gas. Now, gas has gotten so expensive, 4 or 5 times its normal price in Europe, that the Europeans are resorting to using oil instead. So that's adding another dimension to the demand. And frankly, there are no more supplies. As we go towards the year end, the IEA forecasts an increase in demand to over 100 million barrels a day. So when you put it all together, it's going to be a tight market.
Although, you know, Sadad, coming into this summer, there were expectations things would continue to be fairly tight. And yet it's been disproved to a certain extent. Are you surprised by the move down over the last few months?
No, there was a window of 6 months which the Europeans gave the off-takers to try to accommodate their requirements. So they kept buying and getting access to oil. Also, like I said, OPEC has added about 1.5 million barrels during this time frame, and the SPR added 1 million barrels. So that overcame the drop of about 2.8 or so million barrels of Russian oil up to that point in time. But going forward, there's going to be another 1.8 million barrels of Russian products and oil that will not be in the market. And as I said before, you've got that 12, 14 billion cubic feet of gas that goes from Russia to Europe, and that is likely not to continue for very long. Already Nord Stream 1 is down. Nord Stream 2 was never operated. Blue Stream is going to be shutting down. So the problem will compound itself. The summer was not an illustration, I think, of what's going to happen during the balance of the year.
Sadad, I wanted to ask you about increasingly comments that we've been hearing with regard to the disconnect between the futures market from the fundamentals of the energy market. Recently, we just saw a tweet by hedge fund manager Pierre Andurand where he called the oil market broken, saying that it can move down $10 in a day for no apparent reason. Do you agree with that sentiment? Do you think that there is a severe and significant disconnect between what's going on in the futures markets and what's going on in the ground and on the ground?
Yeah, I think Andurand's got it right. The problem is there's such a scarcity of trading in oil because of the volatility, because people are averse to the extreme risks that are out there, that whenever there's a move, it has a real big impact. Yeah, $9, $10 fluctuation within a day is enough to scare people, and the market is very thin. So absolutely. It is broken down. We're in a new world, frankly. The energy world going forward is going to be very different. Without the Russian oil, without the Russian gas going into Europe, going to the West, it's going to be very hard to make up that loss. It's a new world in the industry.